Navigating the world of financial apps can sometimes feel like trying to decode a completely different language, especially when unexpected expenses pop up and you need a quick cash buffer before your next paycheck arrives. Popular budgeting and cash advance applications have changed the game by offering instant access to funds without requiring traditional credit checks or charging heavy interest rates. Among these, the Empower app stands out as a frequent choice for individuals looking to bridge short-term financial gaps. A major point of confusion for many users centers around the mechanics of funding, qualification guidelines, and whether traditional setup methods like payroll routing are strictly mandatory to access extra money. Clearing up these operational rules makes it much easier to determine if a specific financial tool aligns with your unique banking habits and income structure. To understand how Empower evaluates users for a cash advance, it helps to look closely at how the application connects to your financial ecosystem. Unlike traditional banks that rely heavily on a multi-digit credit score or a formal loan application process, modern financial apps evaluate eligibility by analyzing real-time data from your primary checking account. When you download the app and link your everyday banking institution, the system reviews your cash flow, spending patterns, income frequency, and overall account balance history. This digital assessment allows the platform to determine whether you have a steady stream of revenue coming in, ensuring you have the financial capacity to repay the advanced amount without falling into a deeper deficit. The core requirement revolves around recurring income patterns rather than a mandatory, rigid direct deposit mandate tied to a specific account. While setting up a direct deposit directly into an Empower-affiliated account or maintaining consistent electronic deposits is often touted as the smoothest way to unlock maximum advance limits, the app primarily looks for regular deposits that indicate a stable job or regular earnings. The algorithm scans your linked external bank account for predictable payroll deposits, freelance payments, or other regular inflows over a consecutive multi-week period. If the system detects consistent deposits that match your stated income, you can often qualify for an advance even if your paycheck continues to hit a separate traditional bank account. However, relying entirely on manual deposits or irregular income patterns can sometimes limit your borrowing potential or affect your eligibility status within the app. The platform prefers stability, and accounts that feature automated, recurring direct deposits typically experience higher advance limits and faster approval cycles because the repayment risk is significantly lower for the lender. If your income fluctuates wildly or comes from varied sources without a clear, repeating electronic signature, the automated risk assessment tool may restrict your access to cash advances or offer lower starting amounts until a reliable pattern is firmly established in your transaction history. Establishing a smooth connection between your income sources and the app ultimately comes down to understanding how the automated underwriting views your financial habits. Maintaining an active, linked checking account with regular transaction activity ensures the system can accurately read your financial health on a weekly basis. Whether you choose to route your paycheck straight through a formal direct deposit or allow the system to analyze recurring ACH transfers from your legacy bank, keeping your account free of overdrafts and negative balances remains the most effective strategy to maintain steady, uninterrupted access to emergency cash advances whenever you need them.